good morning, good afternoon, good evening, everybody. Today is Wednesday, October 28th, 2015. It is 6 minutes after noon Eastern Time. My name is Jerry Furst, founder and director of Investors Education Network, also known as Traders Education Network, broadcasting here live on CapitalDiscussions.com. Join us here every Wednesdays at 12 noon. There's a chance that we may shift to Mondays. Let me know if Wednesdays are better for you. Type that into the comments. Let me know if you like Wednesdays better than Mondays. But I think we're competing with one of the other groups, so it's a good group, and just want to make it better. So with that, let's get started. First off, disclaimer: no communication should be considered as trading or investing advice, and please do your due diligence. Realize that any type of analysis is subject to change at a minimum, and this is strictly for educational purposes. So what we do here with the beginner trading group is we're really shifting between beginner concepts to intermediate, maybe even advanced concepts. But I will definitely bring and throttle back down to a beginner level based on your questions. So I'd like each and every one of you to go ahead and type in whether you consider yourself a beginner, intermediate, or advanced option trader, technical analyst, beginner, intermediate, or advanced. And if you are using OptionVue, OptionNet Explorer, Thinkorswim, go ahead and type that in too. Go ahead and type that in as I start to move forward. Every week I want to quickly go over the fact that for the most part, for the basics, you have time frame trading, whether you're day trading, swing trading, position trading, or long-term hold and investing, or potentially you have other volatility type trades such as earnings announcements, or as we have today at 2 o'clock, we have potential for volatility with the FOMC announcement. We're waiting on the Fed here to maybe raise interest rates a quarter of a point. I think that because the noise around this meeting is so low, it would be great for the Fed to surprise everybody that we have a quarter point interest rate hike today would be fantastic. Remember that the largest holder of debt is the U.S., so if they raise interest rates, it's going to raise interest rates on ourselves. And if we were to go ahead and take a look at the calendar real quick, notice tomorrow at 8:30 Eastern Time we have the GDP announcement. And so it would be interesting. You can go ahead and have some volatility today at 2 o'clock, potentially, and then some more volatility tomorrow. And these are the two bookends where potentially when it comes to volatility on the charts, and I used to trade currencies, so these GDP announcements and FOMC announcements will typically have huge moves. So typically, for about an hour before the Fed announcement here at 2 o'clock, you're going to see most of the indexes go sideways. And in fact, for the last couple of minutes right before, typically you'll see a bump either to the upside or you might see a bump to the downside come back up. And then typically you're going to see a spike to the high and to the low, and the spreads widen incredibly. And so if you had any standing orders for stop losses, there's a good chance you got stopped out at a loss. But if you had standing orders to get out at a gain, it was interesting, especially in the Forex world, to see whether you actually got filled at a gain or you were quickly stopped out at a loss. When it comes to options, it's a little bit different. And so the concept of the spread widening and getting filled depending upon the instrument symbol that you're trading, whether it's an index like the IWM on the Russell or the Russell itself, for example. Most likely you should get a decent quality fill depending upon your broker. So let me go ahead and check the comments. Again, I got Badresh, Brett, Damien, John, Manju, and Robert. So I've got Brett says that he's an intermediate thinkorswim user, and Damien, intermediate thinkorswim and OptionVue. Okay. Robert, intermediate and a technical analyst, intermediate. Okay. And Brett, neophyte technical analyst. And does that mean that you're, Brett, does that mean that you're new at options, but you're a technical analyst, or you're just new at both? And how will the market react to a Fed increase of a quarter point? I think it would catch. The market off guard. Let's take a quick look. I used to be doing the week ahead here on Capital Discussions, but I can't. I have to watch out and be careful of my time, as all of us do. And doing these webinars can sometimes cost me a lot of money, missed opportunities, and the way trades can move. Take a look today. This is a 5-minute chart, and here we have the IWM, for example. And this, to me, is a little ominous. Let me maximize this one cell. The gray area, for those of you not familiar with thinkorswim, is the after-market hours. So pre-market and post-market from yesterday versus the Russell, which, shouldn't have any gaps. Notice we've had a huge run-up, and was there any real news on the run-up? Not necessarily. And so this, to me, is a classic run-up before the Fed announcement. Now, there is speculation out there that somebody leaked what the Fed is going to do. Rumors, you have to treat rumors as rumors. They could be false, they could be right. I think the only thing, whenever someone doubts the value of technical analysis and charts, I always say that everything else is just a bunch of talk. The only thing that really matters as a trader and an investor is what's the price. If I bought something for $116.30 and I can sell it at $116.50, that's really the only thing I care about. And I care about the fact that it's moving up as I speak. Does it matter whether or not the FOMC information was released ahead of time? From an integrity perspective, yes. And anybody that leaked it should go to jail and share a cell with, well, I don't know, maybe with Uncle Bernie. I don't know. Well, anyway, the integrity of the market is really deteriorated lately. Will it ever get back to something a little bit better? Hopefully. The sooner the better. Which, by the way, there's a merger of Interactive Data a couple of days ago, or actually buyout from the ICE exchange. I don't know if any of you familiar with Interactive Data, what they do, and let me go ahead and just check. And Brett saying seasoned at options, but really realizing I need to understand the underlying in order to maximize option plays. Absolutely. And thank you for that, Brett. Robert, thank you. And that's the whole thing. Learning is always nonstop if you want to stay on top of the game. I just did a presentation live in South Florida last night, and, it comes up a lot as far as, if you don't know how to read charts, you're at a huge disadvantage. People like Tom Sossnoff and Don Kaufman, who's moved on to somebody else who I highly respect in the business, John Carter. John and Hubert did several live presentations for me in South Florida when they were getting started. I went up and I participated in their workshops 2 or 3 times. I helped promote their workshops, and I even went to the Sears Tower in Chicago, went to the Merck, saw Rick Santelli. It's always fun. So anyway, Don Kaufman, Tom Sossnoff make fun of charting and technicals. Why? They're floor traders. And they were taught how to go ahead and read standard deviations, and they were taught how to do math real quick on their feet. And based on that, they could go ahead and hedge off their positions on the floor. The charting and technicals is something that is relatively new. But the fact of the matter is it works. You can look at charts going back to the 1920s, 30s, whatever. These triangle patterns are just, huge predictors of where price might go. So how will the market react to a Fed increase of a 1/4 point? That's my answer is that I think that this run-up is going to be faded at 2 o'clock. I could be wrong. But come back and check the video or take a look next week. But I think that there's a very good chance. Let's go ahead and change the time frame to, let's say, a 1-hour chart. I would say that there's a very good chance that we're hitting upper resistance right now. We're going to go into lunch hour. And then I think that after the Fed announcement, there could be news to bring the market down. Or it could spike way up. But going back to my other observation is tomorrow we have the GDP announcement. And so my experience is that these are just short-term spikes and fluctuations. When you actually go out on a weekly chart, you can't see them. There's been tons of GDP and FOMC announcements on this chart. And it's kind of like taking a microscope on a 5-minute chart. And then when you take a look back at the 60,000 feet, 30,000 feet, it really makes no difference. For those of you learning charting and technicals, candlesticks are huge. And whenever I see a hammer like this, that definitely to me looks like it's hammering out a bottom. And notice these charts here. We had a big discussion last night. I put this back to 5 minutes, double click, and then it goes back to my grid. Charts. Every charting package gives you a benefit and a plus and minus. You can go to the dollar store and pick up a bag of screwdrivers, Phillips head, flathead, hex wrench, whatever. It can fall apart in your hand, and it might be perfect for the quick and dirty little job you need to get done. Then again, sometimes you want to go down to Sears and buy some Craftsman stuff that's going to last, and you don't want to lend out to your friends and neighbors. When it comes to charting and technicals, I look for a lot of different features. The ease of drawing my lines is crucial. So last week we looked at 3M as an earnings trade, and sure enough, if I go back out over to, I could either go to YouTube, and if we go over to the library and click on my name and hit the refresh button, you can see that I think Brett, you helped out last week typing up a synopsis of what I covered, and so I appreciate that, and I went ahead and took what you did and I expanded on it. But I appreciate that, and if you could do that again, that'd be great. So we're about, we started 12:05, so 15 minutes into it. We're going to go ahead and click on the YouTube link, which is right underneath the date right here. You'll see where it says YouTube, and tell me if you can hear the audio as I'm talking, and can you hear the audio from YouTube? Do you hear the YouTube video talking? Ah. We gotta do that tomorrow. My goal is putting $1,000 at risk. My filter is that. So here, last week we scanned for earnings, and I would encourage you to go back and take a look at this video starting at around 1 hour. That's where I started looking at 3M. And let me go over to the PowerPoint, because before this presentation, I went ahead and took a couple of screenshots. And so this is where we were last week. Oh. Okay, we were trading at 150.102 on 3M. Earnings was supposed to come out Thursday morning, I believe, and we scanned for that. And so we went ahead and put on a trade with OptionVue. And notice I'm right here. I've already got us in BackTrader Thursday, October 22nd at 10 in the morning. And if I open up this matrix, we had bought 8 of the 155 calls. And again, we had been trading at 151. And we went right up almost to the mark where Thinkorswim has what's called the market maker move. But we also came right up to, if I show you my chart here on 3M, we had been right here at about 151. I had my upper resistance with Fibonacci's and moving averages up here, and that's exactly where we went up to. The volatility went ahead and dropped. The implied volatility dropped to about 15.4, and I believe went a little lower, which is in line with what I was expecting it to drop down to. And if we analyze, hit the Analyze button, we had put in about $940. We paid $1.16 for those 155 November calls, and they had a theoretical price of about $1.50, giving us about a 23.5% gain. Now, if we move forward, we went, notice the high for the day had been 152.33 at 10 o'clock. Now it hit a high of 154.42. It's at 153.70. Take a look now at 10:30, and now we've got a $357 gain, about a 38% yield on that $941. This was a quick and dirty directional trade on 3M. Real quick scan. If you go back to this video on YouTube, and in fact what I'll do is I am going to post it into the room, copy, and paste. So there's the YouTube video link direct. But again, you can always go out to the Capital Discussions website and review all the videos in the past, because the Netflix video that I did a few weeks earlier was also a huge gain. So again, these are not supposed to be trading recommendations as much as educational learning tools, and so showing you how to use the software, how to go ahead and find trades is really the goal. So let me see if I can just scan through here. We can do that again today. Does anybody have any individual symbols that you'd like me to take a look at? While you're typing in some of that other information, want to let you know that if you are interested in private coaching and mentoring, go to traderseducationnetwork.com and type in the private mentoring and training and fill out the survey form, and I'll be in touch with you as time allows, and we can see if it would be a good fit. And I'll just send that out there, get that out of the way. I also want to go ahead and take a quick look at the market in general. If we go out and take a look at the Dow, you can see here on a quarterly basis, notice this goes all the way back to 1920. Was that 1917? And so you can see this huge, run up that we've had, but we're on this support level right here. We are sitting right on this historic support level. And I have these Fibonacci's that are putting up really strong resistance on the Dow over here. And if we go ahead and bring this down to, let's say, a daily chart, so we're going from quarterly all the way down to daily, notice that we are breaking above. I was saying that we needed to potentially break above this last week, and we did. And so we're heading up towards the resistance level of about 18,000, 1792, 1787. So extremely strong resistance right here. Really strong resistance right up around 1776. How's that? If we look at the Russell ETF, we also have the basis of all charting and technicals is support and resistance levels. And so we just have the support resistance level right here, about 118.90. And we also have this lower lows that were set earlier in the past 2 months. This is the first big drop down on the Russell, August 24th. Notice we tested and broke that support level on September 29th. And now, today, we have a huge bar to the upside that's forming in anticipation of the Fed announcement. Now, Brett's asking, Starbucks and LinkedIn has earnings tomorrow after market close. We can go ahead and take a look at those, Brett. Absolutely. Let's take a look at Starbucks. Now, notice on August 24th, that was the day that the Dow was down over 1,000 points in the first half hour. We hit a low of $42. And anybody that was able to pick that up, I'm sure, is bragging about it. Notice that it's just amazing how the charts work. Gap strategy. Look at this right here. This gap right here. Notice that gap got filled and hit this cluster right here. It's just amazing the way these charts work. Take a look at this little gap right here. You've got that gap right there. Price goes up, it comes back down, fills the gap, goes down a little bit lower, but then it's off to the races. Again, look at the gap right here. It gapped down for a couple of days, came right up, filled the gap, came back down, and then it was off to the races. So Starbucks here on a daily chart is looking pretty good. I want to go to my multi-time frame charts. Let me get to my basic Starbucks. And so here we've got the weekly chart over on the right. We're going to shift this back to the daily chart in the middle. And then we've got the 30-minute chart on the right. I will go ahead and draw my charting and technicals on either Starbucks or LinkedIn, since Brett has brought that out. And that will be our lesson today. Now, LinkedIn, how many people have an opinion, bias on Starbucks or LinkedIn as of right now without even looking too closely at the charts? Or if you've already used the charts, you already have a bias to the upside or the downside based on earnings. If you have a bias, let me know. And then we're going to draw some new lines, and we'll see if that bias changes. Now, this is using TC2000. Notice I've got a lot of lines and Fibonacci's here. I'm not sure if I really want to get rid of them. This is when I hit this palette, this paint palette here. And so I'm going into a little teaching mode on how to use, this charting package. Notice that it has 1 here, 6 here, 2 here, a total of 12. If I hit this checkbox, you can see I can clean that chart up. But as soon as I draw a line, all the other, okay. So now I'm on board number 3, and if I hover over it, it'll tell me that it's board number 3. And if I want to go ahead and I can just start drawing fresh all over again. If I wanted to, I could put all of these other drawings, whether it's arrow, Fibonacci, trend lines, whatever it might be, I can push them into one board so I can clean up my chart and start fresh. So here, notice on the weekly chart, we still have some lines. It's a much cleaner chart. I'm going to leave that alone. But right here, I'm only looking at, if I uncheck number 6, a lot of those lines disappear. So that's just one of the functions of this charting software that I like about it. And the fact that if I draw a line on one chart, it'll show up on another if I want it to. Okay. So Brett's saying, I don't have a bias, but I want to underestimate the upward grind. Don't want to underestimate the upward grind. Okay. Is that on? Yes, this is TC2000, which, by the way, the free version, freestockcharts.com, is actually not that bad for free. Only one caveat with the software, you have to have Microsoft Silverlight installed. But once it's installed and it's a good clean install, everything works pretty good. Now, is that bias, is that on Starbucks or LinkedIn? Now, when I'm looking for earnings, or if I had a client that says, look, I really want to look at Starbucks and LinkedIn, what I first do is I go out to FinViz, which has a good, clear, concise piece of information, fundamentals and everything else that seems to be pretty much accurate. So right here it says earnings, October 29th after the market close. So that's tomorrow. That's tomorrow after the market close. And that's exactly what Brett said. Let's take a look at, it's trading at $209 right now. You have estimates from October 2nd, neutral at 200. You had August initiation analysts of 270, 285. So there's some people who have put their reputation out there saying that they expect LinkedIn to be upwards of the current price. And it's at resistance. Notice that FinViz, they draw some lines for you. That can be plus or minus because they may draw the lines in a spot that you don't agree with or wouldn't agree with if they hadn't drawn it. So I like to do my own analysis, and you can just click here monthly, weekly, daily. But it looks to me like this is a very, for those of you who follow or have heard of Carolyn Borodin and the Fibonacci Queen, she's a big believer in symmetry. And what we have here is the distance that's very pleasant to the eye. The distance from here to here is approximately the same as this, as well as from here to here. A lot of people call that different types of patterns, but the symmetry is definitely there, which is something that I would want to throw some Fibonacci's on top of, and that's on a monthly chart. On the weekly chart, I can clearly see the upward trend channel and an inside upward trend channel that flushed out some weak hands, a little bit of volatility, hit support. Now it's interesting. When it comes to charting and technicals, on a long-term basis, you would say, hey, we're in an uptrend. And we even have, let's say, an inner trend channel right here. Okay. And prior support, prior resistance becomes support. And at this point, it came down, revisited that resistance, came down, and now could we be heading back up on LinkedIn to about 240? I would say that 240, just looking at this weekly chart, is probably a nice target. Let's take a quick look on Thinkorswim. They have what's called the market maker move, and the market maker move here is plus or minus 20 points with earnings coming out tomorrow. Brett's asking if there's a triangle. I'll take a look at that. Which time frame are you asking on that? So currently, if we're trading at about 210, and Thinkorswim thinks that there's going to be about a 20-point move, what's 20 plus 210? 230. I'm already saying 240 is a resistance level, so we're right in there if we are going to the upside. If we go back out, and remember, this is just your simple basic chart right here. If we're trading at 210, minus 30 points would be what? 280, 180. 180 being a prior support level here. On the daily chart, let's take a look and see if there is a triangle pattern. There was a triangle pattern, I would say, right here. And it's already broke to the upside. And I'm a big believer in triangle patterns. I'm not sure if that's the one that you're looking at. And I'll take a look on my charts as far as if I see that. So the question becomes, when it comes to earnings, are you bullish, bearish, or neutral on the earnings? And also, again, you have to stick your finger up in the air and say, is the market in general bullish or bearish right now? Do you want to trade with the general market trend, or do you want to trade potentially against it? And again, we've got this announcement coming out in an hour and 20 minutes. So we want to be careful potentially. And we may be able to, if we do get some volatility today and or tomorrow, we may be able to get some better fills if we're careful, patient, and see some wild swings. Because I would assume LinkedIn will probably move if there is volatility based on Fed announcement or the GDP. How much weight do you put into the analyst consensus? Uh, that's a good question. Not too much, but I just basically want to go ahead and see how recent have the analysts. You know, sometimes you see a whole bunch pile in at the same time, and sometimes I put more weight into it than others. So at this point, I just wanted to make sure that am I moving with the analysts or against them? It's something I just gauge real quick. It's the same thing as insiders buying and selling. Notice with FinViz, you've got all of the senior vice president. You've got Callahan, vice president and secretary, corporate controller. So you've got here's the CEO going through August. It looks like August 18th. It looks like they've all been selling. So that's interesting, right? They've all been selling. And I don't see options exercise. They've been selling for a long time. This goes back to December, November. So you got to ask yourself, all right, why are all these people selling? Does it matter? I don't know. You know, that's the real tough part. You would think that the insiders would be a little bit more, you know, if they liked it, they look at that. Almost $1 million here. This guy, Michael Gamson, he's about almost $1 million. Here's Jeff Weiner, CEO, $2 million. It doesn't say that they're options exercise either. Straight sales. Yeah, got to get a new Bugatti. Yeah, exactly. You don't see any buys. It does make me sit up a little bit more and say, what's going on here? Are the rats leaving the ship, as they say? But let's compare that to Starbucks real quick, okay? Starbucks, nice grind to the upside on the daily chart here, the quick and dirty FinViz chart. On the weekly, nice, beautiful run to the upside. And monthly, also a nice push to the upside. They haven't had any significant pullback except for back in August, that Monday morning. So, and sometimes that's just, quick rotation in and out. So again, October 29th after market closes, they do have a dividend of about 1%. There's a reiterated price estimate of 63, 64.60, and so fundamentally, Starbucks is just slow and steady. Notice here they show options exercise director. So LinkedIn, you don't even see any options exercise. It's all stock transactions. And here you can see a combination of so these are options exercise, sale, options exercise. Interesting. You don't see too many buyers here either, do you? Where are they putting their money? That's where I want to know. They're buying gold. I don't know. Value, 1.3 million, 3.3 million, 600,000, 5 million, 1.3, 2.3, 19 million. So even Mr. Schultz is, look at that, $69 million. It's about $100 million. Geez, he could give Donald Trump a run for his money for a few minutes. That's a lot of money. He's got to pay taxes. Or at least you think so. Yeah, and what's the date on that? That's going into the springtime. He's been selling for a while here, options exercising. This goes back to December of last year. So, this is interesting stuff. And if you were only basing your buys and sells off of this type of fundamental information, you'd be scared to buy the stock. If you said, well, the insiders and even the CEO, as flamboyant as Mr. Schultz is, he's been selling, but, it's just something to consider. All right. So that's Starbucks. Those are the fundamentals at a really quick glance. Okay, we're for the most part technical going into earnings. My gut feeling is that when it comes to Starbucks, I think people are pulling back. The anecdotal evidence is that money's getting tight out there for the retail person, even if the price of gasoline has come down a little bit. A lot of other things such as insurance and other issues are soaking up whatever money is coming out of the gasoline savings. It's probably not going into Starbucks like it used to. You guys tell me if you buy or sell cups of Starbucks or know people that do, if they've cut back or they're buying more. On the flip side, LinkedIn looks to me to be a lot more interesting. We have a plus or minus 30-point move on Thinkorswim for LinkedIn. See that here, the plus or minus market maker move. Take a look at Starbucks. And LinkedIn, again, is trading at $210. So that's about a 10% move on a $200 stock. If we look at Starbucks, we're only looking at about a 3-point move. Now, look, last week we pulled out an earnings trade on 3M, which is it didn't really have but a 5-point move, I think. And let's just put that one to bed. But one more time, let's just look at this chart because it is interesting. Where I was pointing out that we have, and this chart on the weekly chart mimics the Dow. Okay, so you have this Dow component 3M, which is forming a potential head and shoulder, where we have the left shoulder, the head, and are we forming a right shoulder? Don't know. But it sure looks like it could be. And again, I've been pointing out this potential head and shoulder business on the Dow and the major indexes, saying that going into the beginning of next year, we could still be going up and sideways, and then potentially coming back down to the support level of about 135. When we had earnings come out, notice this is the earnings gap jump from about 150 up to 157 as I was showing you guys last week. So that was about a 6-point move. And with that 6-point move, we had notice at this point in time, I'm really going back to 3M now, aren't I? So if we move forward, and this is interesting, before we jump into LinkedIn, I'm going to focus on LinkedIn in a minute, but let's wrap up this 3M trade. Notice right here, this is the high, 154. At 154, we have a gain of about $600. That $1.16 that we paid is now worth almost $2. It's a 64% yield. But notice we have, if I look at my chart, watch how I use OptionVue. I know with hindsight that we had a high on the 22nd at about 1 o'clock. We had a high of about 157. Wouldn't you like to be able to go back to the future? Okay, 157 at 1 o'clock. So right now at 11 o'clock, we don't know that, do we? But okay, using the Analyze tab in OptionVue, then coming down and hitting this little D button here, that's the details. If I say that today, October 22nd, we're going to hit 157, the theoretical value of this 155 call should be about $3.63, yielding about $1,900 in gain off a $940 excursion, giving us about a 200% yield, 210% if you're counting. Okay, so again, it would be nice to be able to go back in time, and then we could all meet somewhere in Tahiti or somewhere, Las Vegas. So let's go ahead and move over to 1 o'clock, and let's see if that's true. Let me go back one more time. If we hit 157, the theoretical value would be $3.63. Notice if I close this, currently we're at $1.97 on the 155 call, or we own 8 of the calls, and we're trading at 154. Let's move forward to 1 o'clock. I'm going to move this over here. The seconds, it goes into 30-minute. I don't know why they have an S. It really should be M for minutes. I don't. Excuse me, I'm going to sneeze. Oh boy, right over the mic. So here we are at 1 o'clock. We have a high of 157.04, and notice the current price 156.94. What is the bid ask? Well, that's the low high for the day. Notice my legend here shows the low and the high for the day. So somebody actually traded at $3.40, and you see this button over here. These 3 buttons right here allow me to configure the matrix at 1, 2, 3 different ways. So again, what I do is help teach people how to use OptionVue and the software and do analysis. And so if I hit the 1 button, it goes to a 1/6 grid. So I have, here's the 155 call, the market price, theoretical price, the difference between the market and theoretical, the implied volatility at the midpoint, the delta, and open interest. That's my 1/6 grid. If I hit the button number 2, okay, notice here my legend is market price, theoretical price, open interest, the low and the high for the day, actual trades. If there was no trades, you'll just see buttons, dashes, crickets. And then over here, you've got the delta, and then the midpoint implied volatility. And in this case here, for an existing position, that would be in this box. Notice right here it says +8. That's the existing position. So that's, now notice when I hit the button 3, matrix format number 3, this is going to change from low to high to bid ask. So now it's got the bid ask. Notice that we're trading between 350 and 385 with the midpoint at 365. Basically exactly where the detail calculator said it would be. And notice that this black dot on the risk reward graph, nice. It's inside the gamma. Okay, you see this curve? When it comes to options, you've got your delta, your gamma, your theta, your vega, and the maintenance requirements for the trade, and of course the all important profit and loss. Here's the 0 point. Everything above this point is profit. Everything below it is a loss. Notice that we have just a little bit. I love seeing, risk reward graphs like this, and that's why I picked these options. We have this much that we're risking for potentially all of this gain. Unlimited upside because it's just the straight calls. All we did was buy 8 of the November 155 calls. All right, so this black dot right here represents where current price is, and if I hover over on top of that, you can see the potential profit if I was to close out the trade would be about $2,000. But if I click on these other time decay lines for other days. And if I right mouse click inside this window, you can see the dates for the time decay lines. I have 4 time decay lines: November 21st, November 11th, November 1st, and October 22nd. And notice that these numbers change. Obviously, if I bought a call and only bought the call, time decay is going to work against me like gravity. You're going to, or if you want to think of it as an ice cube that's melting, you're going to see the value of that call drop. So, excuse me a second. All right, so with this trade here at 1 o'clock, with hindsight, you can see that if you would have held on, would have had about at least 100% gain, if not more. Okay, so let's go to today. All right, and actually, hold on. Let's just go ahead and let's call that we're going to close this out at 365. I'm going to convert the trade, so that clears that out of my status, and so that's in the bag. If I hit my report button here, I can go ahead and say I started doing these from September. Was it, let's just say 10/1/15 to today. We had a Netflix trade that gave us a $579 gain. We had this 3M trade that pulled in about a $2,000 gain. And this gold trade, gold's acting kind of weird. I just went ahead and plugged this into the simulator. I didn't highlight gold, and it was just a short-term example to one of my clients about gold. Gold acting really erratic. But anyway, okay, I'm going to now exit Backtrader, and we're going to go live. And I'm going to check your comments. Will GDP reflect if the guy on the street is pulling back? I don't know. It's, gross domestic product really is the aggregate of exports, imports, inflation. It really kind of pulls together a lot of information. And there's a website called, I think, Shadow Stats or something like that. They keep on changing the formula for GDP. So my only comment about GDP and the FOMC announcement is that it's a potential volatility event. And so it's a great trading event. I don't put too much trust or faith in the numbers as I used to. And Brett's asking, there are more direct measures of personal spending. Yes, and you have all these different either government or university studies trying to personal spending type indicators and credit and other things. Robert's saying, Brett's talking to Robert. You're right, I'm thinking of a discretionary spending ETF. Can't remember the symbol. Okay. All right. So, and Franz, I want to go ahead and I am going to promote you to a panelist so that you can join the discussion if you want to type in. Franz, if you do have your microphone on, go ahead and mute it, or else we may be privy to whatever your background is, your background sounds. All right. So what we're going to do is go into LinkedIn. We are at 1 o'clock right now. So just like last week, sometimes my best analysis is done really quick on the fly. Again, just to go ahead and put this up here, this is not intended to be a trade recommendation, but I'm going to go ahead and show you how I do charting and technicals and how I'm using TC2000 to do some basic analysis. What I'm going to do right now is I'm going to show you, I'm going to clear all of my lines. I'm going to go ahead and, if I click on that, that's all of my lines. I'm going to right mouse click on that, and I'm going to delete all of my drawings for LinkedIn so I have a clean chart. All right. Now, I'm going to start all the way over on my weekly chart. And LinkedIn's a relatively new IPO, 2011. So if I wanted to try and look at, let's say, even a monthly chart, you know, not really going to get that much information compared to something like 3M. But on a weekly chart, okay, and what I'm doing also is I'm moving more data in and out with my scroll, what do you call that thing on the mouse thing? The scroll wheel. And so right now I'm just going to go ahead and mark off highs and lows. You see these little arrows over here on the right edge? These are little like hooks where I can grab the chart and drag it up and down to make sure that I can really see the tops and bottoms. And so I'm going to connect. Notice the bottoms to bottoms right here. It's pretty close to this right here. I'm just going to go ahead and put it right there. Okay. So there's the bottom. And watch this. If I click on that and say create parallel line, because this is a monthly chart, notice that if I go up right here, we've kind of got an inside buffer zone there. We also have a nice little trend channel right here, which could also end up becoming resistance if price wants to run away to the upside. I'm going to go ahead and draw some Fibonacci's. I hit the palette, and I go to Fibonacci's, and I want to draw from this high to this low. I'm going to make that a little bit darker so people can see it a little easier. And I'm going to set that as default. Okay, so then I'm going to go ahead and notice I was telling you about Carolyn Borodin with her Fibonacci Queen analysis, where the symmetry of the move from here to here is very similar from here to here. Now with TC2000, notice if I go ahead and just click my mouse and drag an arrow from the top to the bottom, look at my information window over on the left. It tells you on the very bottom that there's 37 bars. It's taken 8.5 months to draw that line from the top to the bottom, from August 23rd, 2013 to May 9th of 2014, and it's about a 48% move. So let's take a look at that for a second and say 37 bars, 48% move. I'm going to do it again over here. I'm going to drag this down from the top to the bottom, 29 bars, 6.7 months, 37. So it's close. It's not exactly perfect, but it's something to analyze if you want to really go ahead and start looking at the numbers. But let's go ahead and clear that off. Okay. I'm going to draw some more fibs from here to here. And I'm looking for fib clusters, which I have one right here at about 232. We're trading at 210. And so I'm going to go ahead and draw, because this is on a monthly chart, a weekly chart. We have upper resistance over there, and I'm also going to draw bottom support level right here. Okay, now I can see this trend channel over here. Let's bring it into a daily chart. Notice the gap. I was explaining about gaps earlier. Notice this gap right here. And notice another gap right over here. This gap right here, I'm going to go ahead and draw a line from the bottom of that gap. Notice the 200 period moving average right there, coinciding with, look at this, we have three reasons why price is likely to hit its head, or at least hit about 220. So we're talking about at least a 10-point move to the upside. Because why? Number one, we have a 200 period moving average. Number two, we have a gap to fill. And number three, we have a Fibonacci. All three of those points say that we have at least that as a price target 1, followed by price target 2 up here, which is this level right there. Okay. Now, I'm going to go ahead and put in a bias to the upside on this LinkedIn trade. Could be completely wrong. But I thought I made Franz a panelist. There you go, Franz. Let me clear all this off. Okay. Let's recap real quick on LinkedIn. We have earnings coming out tomorrow after the market close. We have a market maker move plus or minus 20. Okay. Now, tomorrow's Thursday, which means that do we have weekly options? Yes. That means that we can buy a lottery ticket. If we expect it to go up at least 10 points, let alone 20 points, we could buy a lottery ticket that is either going to make us money or expire worthless in 2 days. Or we could even potentially look at calendars. So that's going to go into my thinking here. As far as if we do go 20 points to the upside from 210 to 230, what are we looking at just as a ballpark? It's going to cost us about $4 if we wanted to buy that. It's going to cost us about $4 for a 2-day option for this thing to go up 20 points. All right. Now, how does that compare to buying the January 230? Well, the January is going to give us 80 days. It's going to cost us twice as much. Okay, but notice that if we sold the October for $4 and bought the 2016 for $8, now we're only paying $4 to get 80 days, 79 days. So just thinking about that, let's go ahead and we can compare that real quick with OptionVue. So we're going to go ahead and go into OptionVue, type in LinkedIn. Currently trading at about 211.56, up $1.75 today. Notice it says after market close tomorrow, the 29th. Plenty of volume on the options. Nothing to worry about as far as that goes. All signals are green as far as making a trade on LinkedIn. I want to go ahead and check the volatility chart. And on a weekly chart, the implied percentile ranking is 76. On a daily chart, it's the same. The volatility crush looks like a EKG. So the idea is that right now, this 76 will most likely crush back down to, let's see, from down here, you got 53.7 as the current implied volatility. It will probably come back down to about 31. And what's interesting is you have this volatility cone. notice that the volatility cone says that typically you have implied volatility going up as you get closer to earnings, up to about 60 to 70, which is where we're at now, right? We're up around 60, and then typically afterwards it drops back down to 30, drops back down to 29, drops back down to 35. So a volatility crush from, let me go ahead and turn this off. A volatility crush from 53 down to, let's just say 40. It's going to be about, let's just round it and say a 15% drop in volatility. Okay. So now that I've figured out the implied volatility, have I lost anybody? Let me stop for a second, because I know that this is supposed to be the beginner's room, but I polled the group earlier, said most of you are intermediate. Am I losing anybody so far with what I'm showing you? I've done the technical analysis on the chart. I am biased to the upside for at least 10 to 20 points, which is in line with the market maker move. Robert, good, okay. I went ahead and looked at the implied volatility, and now we're going to drill into a trade. Now, I was saying that we can take, I'm going to go ahead and with OptionVue, notice that we only have the monthlies. Well, no, here's a weekly. Okay. Sometimes we have to set it up. So here on OptionVue, it shows that we have 3 days, which is Saturday settlement. So really only 2 days left. If I was to go ahead and sell the 230 call, let's just say I sold 10 of those, but if I wanted to go ahead and buy the January, now notice inside the grid right here, that's my potential trade. If I hit the Analyze button, this is the risk-reward graph. Now, if we go down, if we're wrong, if LinkedIn disappoints or whatever, have forward guidance and it's negative, we could lose. Notice right here, as far as the days go, we've only got the next really 3 days. We got the 31st, 30th, 28th, 29th, 30th, 31st. And that's as far as OptionVue is going to show us. So this is at expiration of the week 5. Okay. Now, earnings comes out after the market on the 29th. So we're going to look at October 30th. And so I'm going to come down to 2 time decay lines. And I'm going to make that the 30th. Because I'm not gonna hold it through expiration or settlement. Okay. I'm expecting a minus 15% crush on volatility. Watch this profit and loss graph change. Okay. And that's on October 30th. Okay. Why that changed like that, I don't know. Okay. So minus 15% change in volatility with a maximum date of October 30th, which is 2 days from now, using approximately $4,000 for the excursion. We could make, if we are correct, if it goes up to 230, we could make about $4,200. Let's take a look at that on the details. If we go up to 230 with a 15% crush in volatility, we're going to sell the week 5 October 230 call for $4.30, but we're going to buy the January 16 230 call as a calendar. And so the theoretical value of the one that we sold for 230 goes up to $5. And the one that we bought to January. It went from 840 to 13, giving us about a $4,200 gain, which is about 100% yield. Okay. So that's just one quick example. Now, take a look at this. Let's compare that to if we just bought 10 of those instead, saying that we're just going to take the lottery ticket route. Either we're right or we're completely wrong. And if I superimpose the two trades, you can see that going up to $2.30, let me just bring this down to one-time decay line, and today plus 2 is October 30th. Notice that at the $230 mark, just buying the call, I would have to really move much faster, because if it only goes up to 230, yeah, I'm breaking even. Whereas by doing the spread, I've got the profit of $4,000. So sometimes, if you're a beginner, this is an important lesson. A lot of option beginners, they don't understand spreads, and in fact, their broker sometimes will not let them put on spreads. They're at a huge disadvantage, because they'll go ahead, and this is how many times have you said or heard somebody say, I went ahead and I bought the 230 call, and it went up to 230, and I lost money. And that's why. First of all, you run out of time, and if you bought the 230 call, it has to be above 230 to have any intrinsic value. Okay, so Brett's saying, I'm with you trying to protect the vol crush. Yes, and that was project the vol to crush. Right, okay, so we're moving forward. Okay, I'm just checking my comments now. So that's one potential trade, putting on a calendar. Okay, and that's not a bad potential trade. Let's take a look at Trade Finder. Okay, let me go ahead and clear all those. Let me take this off the board. I have no position to analyze. I'm going to go into Trade Finder, and I'm going to say that we're going to have a price of $235 within 2 days with a volatility crush of 15%. Okay, now, I'm sorry. First of all, I have to click this button to bring in LinkedIn. And what I also want to do is make sure I update my asset file for LinkedIn. And so I hit this little button here and hit go, and I just make sure it updates with the most current data. Okay, now, current price is 212, and I'm saying, all right, let's just say 230. And 2 days from now, with a minus 15%. Come on. And my goal, let's just keep it simple with $1,000 at risk. And I'm going to deselect all of my strategies and say, just give me what the best call option would be. Now, I would never have figured out on my own that the February 255 call for $5.70 would give me my best probability of profit at 75%, and this is what that risk-reward graph looks like. Let me look at my best case return. Is the 260 call for December for $1.95. That's what that looks like. If I superimpose those two, you can see that my break-even point is this dashed line here, and at 203.39, that's the break-even on October 30th with a 15% drop in volatility, and I would potentially be breaking even if I hit the 230 target. you can see I'm going to have to bring in a little bit more information. And what OptionVue does is put this vertical line on my price target. And so my best case return option is buying 5 of the December 260s, which would give me about a $2,000 yield, versus just buying 1 of the February 255 calls, which has the higher probability of profit. Okay. And what this shows you right here, probability of profit 75% inside this window, I would go ahead and pick up about I'm trying to get 230 right there. Okay, close enough. It's about 100. It's for $570 of maintenance, I would get about $964 gain. 975. This is interesting. This should be comparing apples to apples on margin maintenance. 975 versus 570. Okay, I'm going to go ahead and hit this again. Analyze, close, and probability of profit. Analyze. Okay, superimpose. And 570, that's really strange. It should be comparing apples to apples on these trades. Obviously, one at 570 is 570. Oh, okay, that's why. Because it wouldn't, okay. If I hit goal, let me put in here $1,100. Because it wouldn't give me a trade. What I'm trying to do is make sure that I'm comparing 2 trades that are similar in excursion. So now, here's the 2 February 260s, and the price has already moved, versus that's the probability of profit being at about 73%. Now it's telling me I've got about a $1,700 gain with a 73% excursion. Notice for 65%, I could buy 4 of the 260s for $262. I'll compare all these. And 64% yield, 64% probability of profit. $1,500, $1,600 gain. 62% at 2,000 gain. Another 2,000 at 62%. Here's another 1,700 gain, and this is 1,870 at 58%. Now, all of these trades are relatively close. However, at right here, and I can stretch this out a little bit so we can see this a little bit clearer. Okay, this line right here that I clicked up on top has the best gain of about $2,300 using about 1,048 bucks. Okay, if I hit the details, it tells me that is the buying 4 of the January 260 calls for about 262. And if we hit 230, we would have about a 220% gain. Now, remember, 230 is just taking the 20-point gain, and that's also the point where I'm looking at right here. This is the upper level right here, 230, 233. What if it only hits its head up at 220, which is only 8 points away? What if it only goes up 8 points to 220? Well, we just plug that in. That's only 123% gain for a couple of days worth of work. What if it completely goes against us? let's say that it comes down to 190 or even 180. Okay, well, 190, we would have about a 44% loss of $445. So we'd lose about 50%. What if it dropped down to 180? About a 70% loss. But we'd still have some cash left over to fight another day. So that's the worst case scenario, just buying the straight calls. Now, and that is, if you take a look at Trade Finder, this is based on the probability of profit. Okay? What if about the best case return? Best case return is also calling out the 260 call. Okay? Okay, now, strategies. What if I want to do a diagonal or a horizontal calendar, time spread? Now, it's crunching through all of the options. Because remember on my first example that I just did off the top of my head, I was going to say, let's sell the 230 in the near term for $4 and buy the 230 call going out to January for $8. So that would only cost us $4. Now, this is where we really could get into a lottery ticket type situation where instead of putting $4 at risk, if you just want to go ahead and play this, look at this. It's telling us that for 35 cents, we could potentially buy 29 of the week one November 205 call and sell the one that expires for $14.60. So it's only going to cost 35 cents, and we have a week. And this is what it looks like on the risk-reward graph. That is, that's a powerful looking trade. 35 cents per spread. You don't have to spend $1,000 in it. You just go ahead and buy, instead of buying 30 of them, buy 10 of them. And that's what OptionVue does. Gives you options and shows you some trades that you normally wouldn't necessarily think of. So in this example, if we were to hit, even if we were to hit 180, we're still profitable on this trade with the assumption of a 15% volatility change. Selling the October week 5, which expires this weekend, selling the 205 call for $14.60, and buying the week 1 205 for $14.95, 35 cents. Can we get that execution? Can we get that execution? That would be interesting, right? The 205 call. If LinkedIn broke to the downside, the implied would fall less, Brett's asking. It's still going to crush. Okay, so there's a good question as far as, what about the implied volatility crush? Let's look at Thinkorswim for a second and notice that next to each option chain, if you collapse the chain, you can see here is their implied volatility that they see, 143 for the entire option chain that expires in 2 days, drops to 86 and then down to 70. So you're still going to see a huge drop. And remember, I only anticipated a 15% drop. Believe it or not, and this is important to take a look. Suppose we had a 30% drop in volatility. Take a look at these numbers. Right now it's saying that if it dropped to 180 with a 30% drop, instead of being a $3,500 gain, all right, no change on vol. It already blew past the Vega. You can see the Vega here. Once it drops down to 180, your other Greeks are going to take over because your theta is going to kick in. Your delta, is it the delta? The delta is going to make up the difference. The gamma is going to make up the difference on this trade. It turns out to be less of a volatility trade if it drops down to 180. What if it goes up, as I was saying, to 230? And at a 30% change in volatility, we have a $4,200 gain. But if it's only 15%, does it change? Nope, not according to this formula. So what I would encourage you to do is to take a look at the option calculators and get used to looking at how volatility change is going to affect the price of the options. The fact that we have these options with only 1 week difference at the 205 call range, I don't know, you would think that there'd be a little bit more sensitivity to the volatility. Yeah, so there is less of a crush. Okay. So anyway, it's now 1:33. We have gone past the 1 hour mark again. Went ahead and we analyzed LinkedIn. We looked at the charts. We looked at the volatility. We looked at Thinkorswim and the market maker move, expecting a plus or minus 20% up or down move. We looked at a straight calendar spread that I just looked at off the top of my head. And then we also used Trade Finder to try to find some more extraordinary opportunities. And so with that, I want to go ahead and once again say thank you all for joining in. My website is traderseducationnetwork.com. And again, if you would like a private consultation, want to learn more about OptionVue, want to learn more about charts, want to learn more about option spreads, go ahead and just click on that link right there, fill out the survey, and I'll be in touch with you as time allows. And also the video, make sure you go out to the Capital Discussions website and you will see the recording link by going out to Capital Discussions. You just click over here on Jerry Furst, hit refresh, and then you can click on this date right here. That'll take you out to the YouTube site, and you'll be able to review what happened. And that's about it. All right, everybody, I hope you picked up a few things, that you learned a few things, potentially have a trade to analyze with LinkedIn earnings coming in. And with that, I want to wish you all a good week ahead trading. Watch out for the Fed announcement coming out in less than a half hour and the GDP report that comes out tomorrow morning. And we will be back in touch next Wednesday at noon Eastern. Again, today is Wednesday, October 28th, 2015. My name's Jerry Furst, founder and director of Investors Education Network, also known as Traders Education Network, and you can contact me at jerrybfirst@yahoo.com as well. There you go. There's my email address. All right, everybody, over and out. I'm going to hit the recording button and wrap this one up and get back to work. Over and out. Bye-bye.